Hello, today is Thursday, May 27th. I'm Tracy Anderson, and let's talk about some markets, and let's get this done, and then we can enjoy a beautiful Memorial Day weekend. Let's start with beef. I'm convinced we're at the peak of this market. Ribeyes hit an all-time high this week. Tenderloins are exceptionally expensive. I think strip loins and short loins will be the first of the middle meats to break this market. There's some encouraging signs. We'll be moving lower next month. But we're at such high levels now, it will take a few weeks to feel normal again, but I do think we will see this market move lower and soon. I should add, except for ground beef. Summer burgers will be more expensive this year, but as a relative value to the rest of the beef cuts, yeah, fire up the grill. Overall, last week we saw 669,000 head harvested, well up from the 640 the week before. Next week, we have a holiday-shortened production week, but after that, I'm expecting to see that 660,000 and higher level consistently, which will help move this market lower. Moving to chicken, and it's the same old tune, very tight, very high. Egg sets last week were 240 million, up 5% over last year, but the more important number is 2.5% up over 2019. I still think we need to be considerably higher to get out of this tight chicken market. Another component of the egg sets is the hatch rate. In other words, how many of those 240 million eggs actually hatch? Hatchability is down to about 80% from a normal 82%. 2% of 240 million eggs that won't be producing is a lot of missing chickens. Tyson Foods has mentioned this as an issue within their production and are replacing underperforming roosters to get the job done. Whatever it takes, fellas. Okay, let's go on to pork. Another week, another reduction in production numbers. While I think beef will correct this, I don't see that happening with pork. Ribs continue to be just incredibly expensive. Butts again are high and limited availability. Loins continue to be the buy in pork. Bellies are moving up now. Last week we were at 3 weeks at 164, and today we're up to 185. I do expect this summer to be at a $200 belly summer. So if you need to cover your needs, do it soon. Moving through the dairy, through the CME's Thursday close, barrel is down 2 3/4, blocks down 6 3/4, and butter's down 4 1/2. Plenty of milk to supply all segments of the industry, and butter processors are actually starting to build inventories for the fall. I think we may about bottomed out with this dairy market right now, but I'm not expecting a surge up either. And finally, grains. New crop corn is about 90% planted. Soy is about 75% complete. Nothing to do but pray for good weather and wait for end of summer harvest. In the meantime, we have the markets to watch, and corn is actually down again. Yesterday's close at 669, down from last week's 702, so we're seeing some moderation. This is still really high market, and there are some smaller processors opting to liquidate herds than pay so much for feed. With soy, maybe the threat of $50 fry oil chased enough demand from the market. We are seeing declines in soy as well. Still very expensive, but let's see where this market will take us. Biofuels continue to pull soybeans, and that pressure with raising gas prices will not dissipate. Okay, I'm done. Have a great holiday weekend, and thanks for listening, and let's do it again next week.